Hey YouTube, welcome to another video for MBJTrades. We're officially about 10 minutes before, or I guess 12 minutes before market opens. And what I'm going to do with you guys today is just mark up my charts. I'll be paper trading today, just using ICT concepts to catch you guys, or I guess catch a grasp of what I do on a day-to-day. So you can follow that and perhaps learn from it. I'll be posting this video on YouTube, and as well as I just made a new TikTok. It's MBJTrades on TikTok. I can put the link in the description for this video so you guys can follow me on there, because I'll have a lot more, I guess, short form content, for anybody who wants it. Let's see, so let's get started. Okay, options. Wait, not that. Not that. Okay, yeah, so I believe that's working. All right, so what I basically do is I go on my daily time frame. I know a lot of people say, like, if you're trading like smaller time frames, such as the 1 minute, you only really need like a 15-minute chart to help, or maybe like a 1 hour chart. But I just like to go top down from the daily, and then sometimes the week, just to get a good grasp of what I'm working with. These are the tools. I'm pretty sure you guys are familiar with these tools by now. Anyway, so I'll take this line tool and I'll draw the top of my, this is a daily sell side inefficiency. So I'll draw the top of that. And then I kind of just mark it out, daily city, because since I'm going on the 1 minute chart, I kind of just need to know, like, or label what these items are, so I don't have to keep like switching back and forth. And this would be the bottom of the city. Oh, okay, I forgot something from the top. And this would be our daily city high. Then we already took out these, let's see, let me not get ahead of myself. So this is supposed to be here. And then I just use this just to kind of get what that consequent encroachment would be. And then just put my line here. Boom. Okay, so I can delete the box now. So this would be our daily. This would be our daily city concept. Oh, I don't put that. I don't even know how to spell consequent. And we already took out these previous days lows. So if we were gonna go lower, these are some previous day lows as well. We can target. We just do it like this. And I see, wicks as inefficiencies or gaps. Sometimes price likes to go into the consequent encroachment of it, and then it will reject and go higher. So, I just mark those. So this will be like daily wick CE. I know a lot of people think like this is doing too much, but trust me, if you see the way price reacts off these levels, you would want to have these things marked out. Daily wick level. No, actually, put it like this: previous day lows, I put PDL, but it's previous day lows, and then previous day highs. These some good highs up here, it looks like. So PDH for previous day highs. And with that, I have all my levels marked out. So let's go over it one more time. So we have our daily city low. We have our daily wick consequent encroachment. We have previous day lows. We have the daily CIBI consequent encroachment right here, the daily CIBI high, and then previous day highs. Okay. So based on the price action on our daily chart, as you can see, we came all the way down here. That's when we had that crazy day in NASDAQ. We swept like a shit ton of lows. And then we have this strong candle closure above this daily CIBI. So, you know, a retracement is warranted. That's normal. It's not something that's gonna, you know, stress us out or anything. And it's retracing into this bearish candle right here. And so what we would expect to happen is for price to probably, you know, from this inefficiency level, go higher, probably take out the previous day highs, but the market can be unpredictable at times. All right, and just give me one. Wait, let's see. Yeah, okay. 1 second. Okay. You know, after I finish my daily chart, I kind of like just to go to like the 4-hour chart and then see what's popping right there. So as you can see, we have this other inefficiency right there. So I would mark that out. I was watching this and when I mark my higher time frame inefficiencies out, I kind of just use like this orange color, because and the lower time frames I use like a more bluish color, so I can kind of differentiate. When I see the orange, I know, okay, boom, this is a higher time frame. So if you guys watch my videos or you're just starting, you're gonna notice that. So we have this inefficiency. We already came down into this consequent encroachment. The wicks did the damage, and then we had all candle closures above here, and then we had sort of this nasty price action. I wouldn't even call this displacement, but I mean, I guess it is on a higher time frame. One thing that I want to point out to you guys too is the fact that I want to view this as like a balanced price range on the daily. So like if price got down here, I would expect it to go lower. And here's why I'm viewing it, just because we have sell side delivery here and buy side here. So I'm viewing it as there's no reason to go back down. So realistically, like for example, if I put this candle here, remember this would be efficient, or this would be the balanced price range, because we have, you know, buy side, sell side, buy side, right? And then if you look at the candle closures, right? So this would be the only piece that would be kind of like inefficient, you know, where there wasn't sell side until here, until we came into it right here. And then if you look at the bodies, how they closed, all the bodies closed above this candle's high right there. But for the sake of not confusing anybody, I'll just leave it there. Then I just go down to the 1 hour, see if there's anything that, you know, that I'm missing, anything that could be used. Not really. I also like to identify like different like buy side and sell side liquidity levels. So this would be some sell side, this would be area sell side, especially like I would use it in confluences with the daily wicks and stuff like that. So keep giving a sec, guys. mouth was kind of dry. Cranberry juice. Cranberry juice is definitely the way. Yeah, I mean, I'll pay more attention to this once we go down to the smaller time frames, but off the rip, I'm seeing this inefficiency barely got filled, or it looked like we went to the midpoint. I'm not gonna draw it out yet. And then we have this move downward. So wondering if this is gonna be like some sort of inversion, or if we're gonna just come into this area and then displace when market opens. The market's supposed to open in 2 minutes. So yeah. Let's see. Okay, so yeah. Then we go on the 15-minute. I like to mark out our 15-minute highs and lows. That's what I do. So let's see. Okay, should be good. All right, and then 15-minute highs and lows. I'm seeing this as right there. So see, I have the initial sell side, and then if you guys look, I have like basically all my different confluences just saved. This just makes it a bit easier for me. It makes it quicker, and it helps me trade. So if this is something that can help you, just I guess take note and see what I do that you could apply in your own trading, because I feel like at least for me, that was something that, you know, I kind of did, or just watching like different people's videos and then just kind of like coming up with my own style, flow, process, whatever you want to call it. Boom. So then this would be buy side. See, this one is blue. I have different colors. It just helps me be organized. Okay, I'm not gonna mark up this high, but these are relatively equal, so I'm just gonna mark up this one. I guess I could just put it there, but I don't want to get too far from this goal because I don't know how high up we're gonna go. Especially, I mean, the last 2 days was pretty decent price action. We caught 2 wins, and then I'm not gonna mark out this high because this is already marked out as my previous day high, so I know that's an area that market can go. This is already marked out as my previous day low, so I know this is an area that market could go. If it wants to go any lower, it'll probably take this low, but I don't expect it to go all the way down there, but we'll just have to see. So after I mark up my 15-minute chart, I don't go to the 5-minute. I go to my 5-minute like throughout the trading session, like if there's something that I need to see, but I'll just go straight to the 1 minute. And then let's see, one thing I have to mark out is our 12 a.m. opening price. And I know you guys are gonna think like this is boring or whatever, or like just get to the trading, but trust me, bro, this is a process. And this is why a lot of people aren't profitable at this point, because you're not gonna get profitable like rushing it. You gotta take your time, and you're not even supposed to be like, it's 9:30 right now, the market just opened. You're not even supposed to be placing a trade on market opening. You should wait at least like the first 15 minutes and basically just let the market show you or tell you like what it wants to do, you know, before you wreck yourself, man. Okay, so I mark out this level as well. This is what's going to be known as our new week opening gap. New week, see, Friday 4:59, and then I go 1 candle over, Sunday 6 p.m. So this marks out our new week. The reason why is we would have closed right here when market closed on Friday, and then when market opened back on Sunday at 6 p.m. we opened up here. So this leaves this whole inefficiency. Okay, so I will mark it out from the time it closes to the time it opens, and then I call it N wall. People call it N wall, new week opening gap. And I know you see the thing that says N dog. That's just new day opening gap. I'll show you that as well. So boom. Then I have my setting set out so that it already goes forward. And as you can see, let me see how price reacts, how it fills in these inefficiencies and gaps. It's just beautiful the way it does it. Now today's Tuesday, and this is our new day opening gap. All right. Oh, today's Wednesday, is it? Yeah, today's Wednesday, sorry. I'm living in time lapse. This is our new day opening gap right here. So as you can see, Tuesday, April 15th, and then this is the next candle over would just be, well, not the next candle over, sorry. This is when the session closes, right, at 4:59, and then this is when it opens for the next day. Technically, it's the same day, but it's the next day in terms of the trading session, kind of, you know. So this will open up, and this will be like Asia session. So then, same thing, market close, market knee open, and new day opening gap. And I have it marked out, but it's a terrible color, so. Okay. You know what you guys can ask, are you done yet? No, I'm not done yet. Don't rush me. Okay. Another area or level we should mark out would be our London session highs and lows. I'm promising you guys, these confluences, they really make a difference. They really make a difference. Oh, I don't have to do that because I have it London low. Then what? Oh shit, what happened here? Okay, Mr. Trump. Bro, I swear. I don't know what Trump be doing, bro. But, oh, and then this will be our London session high. So instead of just doing it like again, I'll just put like / London high. You know, just to try and keep the chart clear the best way I can. No. Okay, don't panic, guys. Don't panic. Where is it? Okay, yeah, this is it. Cool. I'm telling you guys, don't panic. I was panicking. Okay, now we're gonna mark out 8:30 price. Essential, of course. Now we just need to be ready by 9:50, so it's no rush. So 8:30 price would be boom. This candle here, this bullish candle right there. Boom, 8:30 price marked out, and then we're gonna mark out 9:30 price. Where is it? Boom. All right. Now we have all these levels marked out. Cool. So let me show you. See, so as price, price moves up and down or sideways, but as it moves throughout the day, as it hits different levels, targets different levels, and have like different setups are gonna form, I can use these different levels as confluences. And if there's anything that you guys need to know, just let me know in the comments. I can always go over it. I can always create a video that's more in depth on any topic. Just comment, just let me know, I'll do it. you know, I want to help you guys to learn what I know, so you can be the best trader you can be. So here's one very important thing that I didn't know when I first started off. We have electronic trading hours, which is what you see now. Most people are going to see this when they open their chart. And then we have our regular trading hours. Don't ask me completely what the difference is. I do not know. But what I know is, once you go on, see, it says RTH now. So once you go on the regular trading hours, you see how it looks all different. See how there's a gap? That's because, boom, this is where we open. So when the market opened at 9:30, we opened all the way here. So this whole thing is an inefficiency. So what market's gonna wanna do is come in and fill it. It can fill it all the way, or it can fill it to the midpoint. We would usually wanna aim for the midpoint, because a lot of times the market goes to midpoint and then it will reject and go lower, or, you know, it'll do some foolishness that you probably don't wanna be a part of. So we're gonna mark it out. And from this close to this open, and this is going to be our opening range gap. And I don't know which color I'm gonna put it at. I don't know. Let's try getting too colorful, I'm gonna be honest with you. I mean, let's see. Okay, cool. So as you can see, this is the midpoint. It doesn't have to touch it all the way. As you can also see, this is also like a civvy or fair value gap that price could have went into. Not saying that it'll go down now, but like, just look at that rejection off there. It could go down at this point, because this whole price action right here can keep price down, but we'll see. Another confluence I like to mark out is my first presented fair value gap. I mean, I would say this is like a first presented fair value gap, but it's just really small. So I'm gonna want to wait and see if market wants to create something that's a bit better for us. So we're gonna look at the 15-minute chart. So what happened on the open? We displaced heavily upwards into this inefficiency right here. So this can be valid for sells, or market might want to come take out these highs and then go lower. Yeah, so then it's just all about waiting at this point. Like I said, you don't really want to be in the market right now. You want to let price, you feel me, do its thing. And at around 10 o'clock, 9:50, that's when it'll be better to get in. Like, let me show you guys something. A lot of times when I first started off, I wanted to like get into the market right off the open, because I saw like all the volatility and how price would push in these directions. And then, but look at this wick. That's a 113 tick wick right there. You feel me? And not even that. Like, look at the ranges on these candles, man. Look at the ranges on these candles, just for them to wick. So it's not a smart idea to get in now. Just want to let the market, you know, give you an idea of what it wants to do first. And we'll wait for our first presented fair value gap. Like I said, I'll keep an eye on this one, but I really don't want to use that one. We go to the 5-minute, see what's happening. Still inefficiency here. This could be valid for a sell short up. I would like us to take out some sort of, you know, inefficiency, but let's see. With London session doing that huge manipulation upward, I'm into the consequent encroachment of this inefficiency right here. Huge rejection downward. And then especially like on the 15-minute, we have this inefficiency that price is in. Let's see if it rejects off here. Could either reject off here and then start working lower, or we can take these highs right here and start working lower, or we'll see if it wants to build structure to the upside. You might see this candle. You might see this candle on my chart. You might wonder what it is. So what it basically is, it's a higher time frame 4-hour candle. And what I use it for is basically to see what price is doing on the higher time frame. It helps my confluences. As you know, like with price, the candles like to open, it'll make a low and then go higher, or open, make a high and then go lower. And so at 10 a.m., that's gonna print a fresh new candle. So let's see, I'll zoom in. Kind of hard to see some stuff with these things on the screen, so sometimes I just have to zoom in. So if we were going higher, I'd want to see this kind of like stay in this area right here, or go higher at this point, and then the next candle would come, drop down a bit, and then displace upwards. Or if this has a strong bearish close, and then the next candle comes up a bit and then drops, then we know, okay, we're probably going to go lower today. My bias is bearish at this point, so my bias is bearish, and you know what, I'm just going to mark it out. We are respecting so far this gap. Also, I do want to say this is not financial advice of any sort. I'm not any professional to be giving financial advice, but what I have is I have a method that works for me, and I just want to show you guys the method that works for me. And I'm not saying that it's going to work for you, but if you look at it and you try it a few times and it does work for you, then you would know that it works for you. But even just like this alone, like let's say you wanted to enter a trade off of this gap, like I said. So let's say this is your entry. Ideally, a lot of people want to put their entries for the high. It's crazy. I can't do it. It's just too much ticks. And these ranges are huge. Like, I mean, I guess you could do 100 tick, but like, why? I find that the middle candle for the fair value gap is pretty decent, because I wouldn't like when price comes out of the fair value gap anyway. And then we would aim for like probably this low right there, right, which is also around the 930 price. We could return to it, take the magnet off, and then just put it over here for you guys. So this is not even like something that I'm entering, but I'm showing you already. You're risking 65 ticks, and this is a 407 tick reward. So let's see how it plays out. I would want to see this candle close somewhere in this area, create a fair value gap, fill it, and then run downward. Now, as you can see, this is live. Time is 9:46. I'm in Canada with it. My girlfriend is in the background, chilling. So yeah. So it did close. So watch this. Let's see. So what we have here is a fair value gap. And then we created a change in state of delivery at this level. So, and a change in state of delivery just means that, you know, we were going up, but we took out the lows, which means we would be like going down at this point. this market open in here. So basically meaning like, okay, we're changing direction, change in the state of delivery. We were delivering buy side, but now we're delivering sell side. Price doesn't have to go and fill this fair value gap. I wouldn't want it to. I just want it to run. But if it does fill this fair value gap, I'd want it to stay below the consequent encroachment of the fair value gap. Now, we do have a lot of price action right here that we can come in and work. But like I said, it's just what I would want, because I'm not trying to be in the trade forever. I'm just trying to, find like nice setups and get out. Another thing that happens too that you guys have to watch out when it comes to wicks, a lot of time price will go into the consequent encroachment, so right around here of the wick, and then turn around at that level. Trading is not something where you want to be greedy, so if you have a chance to get out of the trade, you probably want to get out of the trade, especially if you up. Like I said, 407 ticks, it's crazy. A lot of people is not hitting that in a day. A lot of people are not hitting that. But I just want to show you something. 9:30 a.m. opening price. Look at the delivery. Look how price topped it right there, and then we turn. So now we're in this fair value gap. Ideally, I want to see us respect it, but let's see what the market does. Like I said, I had it to take of this low, but a good place for a target also would have been just getting out at the 9:30 price. And the reason why I wouldn't be too scared yet is because wicks can do damage. So a wick can come up and above the fair value gap, but as long as the body closes below the consequent encroachment of the fair value gap, I'm not concerned, I'm not worried. And all of these concepts are just ICT concepts. I really started seeing like a lot of W's in my trading when I started to trade ICT. So I know a lot of people, they like to say, oh, ICT can't trade, or it stands for I can't trade. But the things that he's saying, the things that he teaches is just crazy, man. It actually works. It actually happens. You might not like the guy or whatever, but his stuff works. So I have nothing bad to say on that note. Okay, so now we're in the macro. We're in the 950 macro. We can expect some sort of price movement right now. Hopefully it's on our side, because at this point I really just want to see us drop into this level, because we're already there. Like I'm saying, this is paper. If this was live, probably would have already taken my winnings. I want to gamble and give the market back its money. And like I said, I probably would have been owed at the 930 price. The delivery on there is crazy. Yeah, but another thing you can do is, this is an inefficiency here. You're wondering why the market keeps going back and forth in that area. Boom, solid candle closure below this inefficiency. Tap back in it, displace lower. This is live. Hold on, wait. I gotta show you guys this, because you might think I'm lying. Wait, let me pull. This is live. Look at that. I don't know if you can see it. This is April 16th. Well, we're in Canada, so 10:52 in Canada, but it's 9:52 on the market, right? Siri, what time and date is it in New York?
It's Wednesday, April 16th, 2025 in New York, United States.
What is the time in New York?
In New York, United States, it's 9:52 a.m.
So yeah. Thanks, dude. Yeah. So like, boom. First trade of the day, banger. I didn't like I said, we're just paper trading, back testing, whatever you want to call it. I'd really be waiting on 10 o'clock to actually place my first trade. At this point, we had a huge move up. So is it likely that we'll go back, take out some buy side today? I don't know. I don't think so. And another thing, London lows. Oh my gosh, easy target. It's another level that the market would want to take out. Now, one thing that you gotta be mindful of is like at 10 o'clock, like I'd be wanting to get in a trade, but it has to make sense. If we're gonna be oversold or somewhere down here, I'll need a retracement before I can even get in. Let's go to the 4-hour chart. And all of this is just studying, and this is a result of me being able to read price. So remember on the 4-hour where I was saying like I would want a strong, if we're going down, I would want a strong closure from this 4-hour candle. By the way, look at the time, it's only 4 minutes left on the 4-hour candle. So yeah, so if we get a strong closure, it could be below here. If it's below here, that's the change in state of delivery. It can be in this area because we're already way low. And then the next candle, I just wanted to open up, and then it'll come up a bit and then probably proceed downward. And why, I know if you're asking, okay, why would you want it to come up a bit? Because we've already been selling from here to here, so a retracement is warranted. If I get in here now, market could retrace and then it'll take me out because my stop loss isn't going to be that big. My stop loss personally, and I know other people have, whatever stop loss is, probably be like 50 ticks. If I'm de-risking, I'll probably use like, well, I guess it wouldn't be de-risking, but if I'm using a smaller size contract, I'll probably use like 100 ticks to allow me more room, especially in these volatile markets. But why I would want it to come up is it coming up on the 4-hour is the retracement. Now, retracement into what level, you may ask? I'm not sure. But that's the beauty of it all. So like I said, I didn't want to use these small fair value gaps as my first presented. So I'm going to use this one. This is a better, I'm just going to take this off. I don't need this, but I just use this to show you guys what the market does. So I'm going to use this as my first presented. And you guys are just going to watch it take out London low. I don't want to be on too long and bore you or anything, so I'm not gonna stay the whole like 10 o'clock hour, especially like when we've already hit this one. But what I would do is I'll give it a few minutes, like after 10. So just wanted to see what the market is gonna do. I know this is gonna take out this low. This is either gonna displace a lower and take out this low right away, or it's gonna dilly-dally around 10 o'clock. It's gonna go up a bit. All you people are gonna think, oh, it's going up, the market's going up. And then it'll continue downward because it has to take out this low, or this liquidity area liquidity. It has to. It's just a matter of when would it like to do it. So like I said, you guys can follow me on TikTok. It's MBJTrades, trades with a S. If you're watching this, you're already on my YouTube channel. Subscribe, like, share it with your friends. I am thinking about doing a boot camp don't know when. If that's something you guys would want to see, just let me know. But I will do a boot camp, and I do want to do a Discord, but I'm just focusing right now on giving you free content so you can see what it is I have to offer. So we're watching market retrace. We could retrace here to this order block and go down, or we might want to return to the first percentage. If you return to the first percentage, then I feel like that'll be kind of like the sells that I want to see. I'll just use my fib so we can see where a good area would be. So I mean, like, yeah. So if it stays below here, it could just displace downward from 930 open. I don't know. I wouldn't expect it. If it does go to the first percentage, it'll probably just wick into it. But I think just rebounding off the 930 price should keep it in check, especially if we have this candle closure below this big green candle. It'll be like some sort of like immediate rebalance to the downside. And then this one will probably go up a bit and then just drop. Yeah, it has like a little tiny wick there. So yeah, one thing that I did learn, like with using my fib, because at first I never really used to use the fib, is that like when price retraces, a lot of times we would get to this level and then it'll turn around. And a lot of times if we ever got above this like 0.5 or 50% level, if we got above it, then it'll be like a reversal move. So a lot of times when I see like big price movements and it looks like we're retracing, I want to use my fib just to get an idea of, okay, is there something that's going to hold price down, i.e. this order block is going to hold price down, this order block coupled with 9:30 a.m. opening price, you feel me, coupled with the fact that in London session we already went hella high, so this a retracement is warranted.